In this video, I'm going to explore the question whether Nvidia is still a buy. My name is Garry Davis, and this is general advice only. So the overview of what I want to cover, whether Nvidia is still a no-brainer investment. It's been a fantastic performer in the last 12 to 18 months. Is that still the case, or have we seen the best from Nvidia, and is AI all a bit overhyped? But secondly, and probably more importantly, is what is a profitable process regardless of the answer to question one? What can we expect from the upcoming Nvidia results in May? I want to look at this from both a fundamental point of view and a technical point of view, and also identify what a safer entry looks like and how one should go about managing risks. So let's jump into it. We'll start, first of all, with a bit of a quick overview of Nvidia. They're scheduled to report on May 22nd, and there's no question they've been an absolutely magnificent wealth builder, and in the process, became a real market darling. Over the last 5 years, the share price is up 17-fold. That's 1,700%. Just over the last 2 years, they're up 400%. So there's no question they've been one of the very best performers on the market, and they're now at a market cap of about $1.8 trillion. But what about the future? So I want to look at this both from a fundamental point of view and a technical point of view. And because there's an argument can be made either way, I want to also look at it from the point of view of, well, how can we profit from AI? How can we profit from Nvidia when we can't be sure of the answer to that question? Will it go up or will it not go up? If you're looking at it purely from that perspective, you have no real control. You're just sitting back hoping that it goes in your favour one way or the other. But there is actually a completely different process that you can adopt. Let's just have a quick look at what the track record of Nvidia has been like just recently. So these are the last 4 earnings results, the forecast, and also what the company was able to deliver. And this explains why the price of Nvidia has rocketed so high. Back in the end of the first quarter of 2023, the forecast was for 61 cents a share of earnings. They came in with 88. That was a 44% surprise. The next quarter forecast was ratcheted up enormously to $1.80, but they came in at $2.50. They still smashed it. Analysts couldn't catch up, and that was a 39% surprise. Roll forward to the third quarter last year, and we'd gone up again to $3.03 was the forecast. But the company delivered $3.77, a 24% surprise. And analysts' forecasts were just being left in the dust. Roll through to January of 2024, the forecast was $4.21, which again is a significant uplift on what they actually delivered in the previous quarter. But they still can't catch up, and analysts are still lagging by around 17%. They came in at $4.91. So it's been a fantastic performance. And there's no reason to suspect that the quarter that we're about to get results on in about 3 or 4 weeks will probably not be another blowout quarter. The odds are that it will, because that has been the consistent record. But the question, and this is the real question, how much is already factored in the price? Okay, the analysts may not have got there yet with their forecasts, but has the market already priced that in? And of course, we don't know the answer to that at this point in time. And that's why it's so important to have a process so that that question becomes far less relevant. So a bit of a perspective on Nvidia in general. So is the growth of AI and semiconductor demand so assured, and Nvidia's position in that so assured, that it's just a no-brainer investment, that this dip should be bought? Or is this the start of a more protracted decline because the stock is overvalued? So could the whole thing be derailed? Is there too much hype around AI anyway, and everything has advanced too far too fast, as it did in 1999 with the advent of the internet on a larger scale? And of course, as I said before, we can never be totally sure of the answer You wouldn't want to put your house on that either way. But how can we benefit? How can we make money out of AI, which really does look the real deal, and minimise our risks? It's just some of the things to consider. And I don't propose to know the answer to these questions, and I don't think anybody else does either. But could competition emerge? Because when you look at the Googles and the Amazons and the Meta, they're selling largely to a retail audience, whereas Nvidia is not. They're selling to those other Magnificent Seven companies and other very large companies of that ilk. So they're not selling to a captive consumer audience. They're selling to a far more discerning and commercial audience, and an audience that has incredibly deep pockets and could decide to take on Nvidia and in effect, make their own computer chips. Now, whether they do or whether they don't is an unknown at this point in time, but you could not dismiss it as not impossible. But stepping back a bit, it really does appear that AI is the real deal, and the reason that is the case is that we're seeing profitability in productivity in so many companies that are outside of the sector. I think that's really, really important. It's a huge game changer, and it's a bit like the climate change debate. It's taken hold, and it's going to run its course. So AI is the real deal. The question is, will Nvidia remain leading that charge? And I think they will in the short term, because a change in leadership will not happen overnight. We won't see the purchasers of Nvidia's chips all of a sudden start to be able to make them themselves overnight. And maybe they never will. Maybe they'll never take that decision. Who knows? Let's look at the growth and the profitability around what has been driving the Nvidia price. Revenue was up 125% year on year, and 71% is the forward expansion of revenue forecast. Earnings were up 584% year on year and 105% forward projection for earnings. Free cash flow, 162% looking forward, growth in free cash flow. The net profit margin, an incredible 49%, and return on equity just amazing at 96%. These are fantastic growth and profitability numbers. And there's no question that the momentum has been enormously powerful. And right now, we're getting a bit of a pullback, which is normal and healthy. But it's really the valuation that is the question. So if we look at the PE on the most recent results, it's PE of 61, which is not cheap. But it's only 32 times looking forward. And given the growth rates up here, you'd have to say that 32 times earnings is not excessive. And if we look at it from a price to cash flow point of view, then it's also 32 times forward expected cash flow. So it's definitely not a cheap stock. But if they maintain their leadership, then from a fundamental valuation point of view, there is absolutely no reason why Nvidia cannot continue. And the odds, at least in the next 6 to 12 months, are that would happen. But that does not make it a buy now, and I'll come back to that. Let's look at what actually constitutes consistent success. So what is the process that allows an investor to get consistent success in the market? And most importantly, takes account of psychology, because when prices are moving around very quickly, 99% of investors just find it impossible to just ignore it. And unless you pay attention to your own particular psychology needs in terms of owning these stocks, then you're probably going to fail. In fact, you'll almost certainly fail. And the reason being is that when you get put under stress, you make emotional, irrational decisions. Pretty much everybody does. And so it's folly to just ignore the psychology side of it. So your process is what should dictate when you take profit, when you get out, when you take losses, not emotion or gut feel. So the process is critical. And we've got to recognize that profit taking happens in even the most robust of trends. And I'll show you another one where that's especially the case in just a minute. And the stronger the trend, the more violent the pullback can be, and often is. So it's really, really important to set yourself up to take advantage of the opportunities that are created. And here's an example of a stock that was owned in the Insiders Club. We entered the stock at the end of June 2023. The stock is Arista Networks in the technology hardware area at $154.92. That was here. So for fundamental reasons and also for technical reasons, the fact that this was forming up in a wedge, looked like a breakout was coming, then that was the entry point at roughly 155. Now the price advanced very nicely with the normal 2 steps forward, 1 step back process until we got to a point where the price really did get a bit of ahead of itself, gapped up here on this particular day on the 12th of February. And then we got quite a dramatic reversal intraday, followed by a significant gap the following day. That was a signal, that was the technical signal that I used to take some partial profit. So it wasn't based on emotion, it wasn't based on gut feel. It was purely about respecting a market signal that has a high degree of probability. So partial profit was taken. Now, only partial profit because I had no way of knowing whether that was the end of the run for the trend or whether there would be more to come. So we don't get greedy. We just manage risk. Now, following that, the price continued to advance and got to a high just over $300. But then it started to go sideways. And at that point, a trailing stop loss was put under the most recent swing low. And the rationale behind that is that the price has continued to trend upwards with higher highs and higher lows, the definition of a trend. But what would negate that trend and change the character of this particular stock? And the answer is that we would form a lower low. And a lower low occurs if we go below the low of this day here on the 11th of March. And so a stop loss was put at that point, and when it was breached, the final profit was taken at 275. Overall, delivering a profit of 72% on this stock in a period of roughly 9 or 10 months. So there was no emotion attached to this. This was very consistent application of process. And now, having done that, it's a matter of, as the fundamentals are still very positive, it's a matter of just waiting for the next dance. It's just consistent process. So there's a real live example. Now, if we look at what can happen to stocks that become market darlings and then the market has a bit of a rethink, this is a stock called SMCI that very recently has fallen from a peak of over $1,200 and fell to a low of $671. Now, if you're an investor that invested, in this somewhere near the peak, this would be absolutely heart-wrenching type of price actions. This can happen to even the strongest, most powerful of stocks. And this is not a small cap by any means. So coming back to the question now about Nvidia and what does a safe entry look like? Well, a safe entry or a safer entry occurs after a dip because by definition, if you've just had a dip, then potentially you've got less downside and you've got more upside, all other things being equal. And secondly, you can make it safer by only buying a partial position. So that means when you start, you are reducing your initial exposure. It provides flexible options in case the stock price does go down further. It gives you an opportunity to buy more at an even lower price. So there is a methodology there that can reduce your risk and increase your upside. So how does it currently set up looking at things right at the moment? Well, we've had, we didn't get a lot of volume off the peak up here. We did on this day. So that was a bit telling on the 8th of March. An intraday reversal candle like that, an engulfing candle on elevated volume is a bit of a tell that we're getting a change in the balance between buyers and sellers. Now, that only lasted for a day, and the market managed to make its way back up and form a double top. But since then, we've not really seen an increase in volume, but the double top is still in place, and we are now getting the price trading below the levels that it was trading at back in March. So technically, we've now broken important support. And again, look at the volume increase on the break of support. Now, this is rallying back towards the breakdown zone, which often can become resistance. So there's a more than even chance that this level around 840 will now become resistance. So to me, this is too risky, or the risk reward to the upside is not attractive enough to be buying at this point. But there will almost certainly come a point when Nvidia will provide at least a very good trading opportunity in terms of risk and reward. So hopefully that's helpful. This is the process that I go through with pretty much every stock that we deal with within the Insiders Club. And best of luck with your trading.